Okay, welcome to Swing Trading with Cycles channel. We're going to do an update on crude oil today, and we're going to look at XLE versus crude oil itself, because there's definitely a huge sort of disparity there, and so just kind of understand that a little bit better. But we'll start with just looking at crude oil itself. And so here is an important thing, right? So like we had this swing low on day 40, right? And it's like, okay, well, maybe that's our daily cycle low, right? Maybe it's going to be a little swing low, kind of like this one, right? This one happened on day 28. You know, we rallied for a few days, and then we collapsed, and then we kind of made this double top situation. Now, what we're getting instead is, after confirming the swing low yesterday, I mean, there was a big pullback, you can see from this upper wick. We're now getting big downside follow through. I mean, so this line here tells you your swing low happened. So we crossed above the high of this candle that marked the low, but then we just completely reversed it. And now we've moved below the low of this candle. So an easy way to think about it is swing high means you're making a lower low, right? And so now we've made a massive lower low below the candle that marked the swing low, right? That's not good, right? That tells you we're going for lower lows, and this itself was a bit of a double bottom kind of situation. So now it tells you, okay, is it going to bounce off of that again? And we have that 74 level below that. Seems like we'll probably undershoot, get down there at least. And then you have the next kind of obvious pivot, which is down here in the 60s, right? Like you can see, hopefully that makes sense to you, that that kind of sticks out. This is another kind of obvious pivot in like the $66 area, but either way, you're talking about the 60s, right? And so that's important to just kind of be aware of, and that's your daily chart, right? That's your, this is telling you this maybe wasn't your daily cycle low. It's also possible we'll get a little bit of a rebound, because that's the thing. Even in a bearish trend, you expect that you'll get at least a little bit of a sustained rebound. This is obviously telling you that this is even weaker. So this is actually, this like little scenario is from my last video, right? It was the idea that, so first off, we knew that we were in weekly cycle decline, and if this doesn't make sense to you, please definitely take a look at the links in the description to get up to speed on cycles analysis. There's not a ton of content out there, and so I learned it on my own, and then I created the content. It's all available on the YouTube channel. There's some written stuff on my blog as well, and so the expectation was, okay, maybe we're getting a little bit of a bounce here, right? Because this candle was green at one point, right? Maybe we're getting a little bit of a bounce here. Maybe we even bounce all the way up to here before rolling over. Now it looks like we're not going to do that, and it's going to be more something like that, right? Maybe like that. And then maybe this bounce comes, maybe we get a little bounce like that, right? And then just kind of, right? Like, so either way, it's a downtrend, right? Like, it's the idea that like we're going to make a lower low, make a lower high, make a lower low, make a lower high, etc. And so this is week 8 of the weekly cycle, and these things can be kind of all over the place. The last one was 24 weeks. And here's the thing, there's also this notion that like, oh, if this is one daily cycle, then maybe we're getting our ICL now, and this wasn't the ICL. Like, my point is, this is a swing low, can't ever not be a swing low, right? It's a weekly swing low. It was significant. We got this big rally off of that, and then this consolidation here. And now we're spilling over out of this. Now, obviously, this could become a false breakdown of this consolidation range. We're running out of time for that. We're going to have to see next week, right? And so, again, this could take you down into the 60s. Also notice the 200-week moving average is down there. I mean, there's a confluence of sort of factors that are kind of pointing to that level. And that's your weekly chart. And on the monthly, you can see that come to bear as well, right? So, again, because this is all the same, right? Like, that's the multiple time frame analysis. The $60 area is this, series of pivots on your monthly. So that was around your monthly low for August 2021, around November 2021, where we had a big flush down. That's when the NASDAQ topped as well, actually, of last year in November 2021. And so, bigger picture, we're declining into the 3-year cycle low, right? The top was March. That was the war-fueled rally. Like, you can see this huge upper wick left behind. Generally, a huge upper wick like this is bad news bears, right? Like, because what it means is that, like, best case scenario, you end up being a candle that's inside that range. Like you end up having a bunch of candles that are inside that range. But like best case scenario, or at least I should say, on the better end of that scenario, you would have that happen at the upper end of the range, like where this, pretend candle is. Instead, you got what looked like you tried to get this little lower high here at one point, and now you've just kind of spilled over. So this is telling you, I mean, if you think about that consolidation box that we drew on the weekly, we had that on the monthly, and we've spilled out of it and then some. We even back tested it from below. I mean, think about that, right? This isn't just another lower high, right, in this series, and it's a back test of this kind of breakdown level. Not good, right? Now, what does this all mean for the actual, I mean, if we know crude oil itself, and this is US crude oil, but Brent is doing the same thing. But if we know that's moving into a 3-year cycle low, what on earth does that mean for something like XLE? So let's first off look at XLE versus crude over, some long-term time span. And we're just using XLE as an example here. Certainly we could look at something else like an OIH or we can look at an individual name. We definitely have that previous video where we looked at XOM as sort of your proxy. But if we sort of just kind of look at, and we'll just make this not log, right? Okay. So we had this like, let's make this a 12. Let's make this a annual chart, right? So these are annual candles now. Okay, so these are your annual candles, which means each candle is an entire year of price action, right? And so this is your WTI, and you can see I just changed this to not to linear as opposed to log, and you can see it's all the same though. It doesn't really change anything. You have this candle for 2022, which looks really, really bad, right? It looks pretty ominous. Think about how that monthly candle was very ominous and what we talked about, like the implications, right? So you have this giant range. So that's the first thing to be aware of, right? And on the XLE front, we have none of that, right? If anything, we're like set up for just another nice yearly candle in 2023 that just pushes off to the highs. And maybe that's what we get, right? Like that's important kind of context, because what it means is, like, can these continue to diverge for even longer, for instance, right? Now, if we think about just kind of big picture, this is 2008. It was a big bearish outside candle, right, of 2007. And what did we get for 2008? The same exact thing, right? It happened the same exact year also. So that's important, right? Because that tells you, when you look at the biggest time frame, that is they're actually moving in pretty much the same direction. The difference is XLE went on to make a higher high in 2014, and it hasn't quite done that yet. It hasn't made a higher high above that one yet. But that might be your ultimate point where it's like, okay, maybe this is like, it's still not made an all-time high, a new all-time high. That would be above 101, 101.52, right? And so we're at 91. Okay, so now still more than 10% up from here, right? And so let's zoom in though to see when XLE topped out and when oil topped out, right? Like if we, let's move into the quarterly level. So the swing high came in the July quarter of 2008. And in this case, and that was a big red year, or excuse me, a big red quarter. And in this case, same quarter. So that makes sense. And we're talking about, obviously, I mean, in hindsight being 2020, it was a big calamity. So it kind of makes sense that things would happen sort of in the same pattern, like, or very near to each other. So this is XLE topping out on May 2008. And that's important because the rest of the market definitely, I think, took a little bit longer. So that's May 2008. And crude oil topped out in July 2008. So that's interesting, right? And so what really happened, though, is we got a top in May 2000, and that's for XLE. And let's zoom in here. We got a top in May 2008, and then we got an inside month in June, and then we got the really big move down in July 2008. So that is actually, that's the thing that you want to pay attention to, right? If you think about that, because it means we basically, like, you know, like, so oil had a green month in May and a green month in June, whereas XLE had a green month in May. Wait, where's the May candle? This guy. All right, let's zoom in here. So this is your May candle, green month in May, but we didn't make a higher high in XLE, whereas we did make a higher high in crude. So that's interesting, because that's actually this opposite pattern we're seeing here, where crude continues to run as XLE kind of pulls back. But you do see that they essentially kind of fall off a cliff within months of each other. So there's no reason to think that XLE isn't going to roll over soon, but it's not giving you any indication. I mean, think about the fact that oil topped out in March, right? And XLE, like, what did XLE do in March, right? It did have, you know, March was an up month. Yeah, well, I guess technically it was an up month for oil as well. And we even got more months of upside too, right? But no new highs. So that's interesting. That all kind of points to this idea that at some point the hammer is going to kind of fall. And maybe let's look at the ratio chart of XLE to US oil. That might help. Oops, okay. And that's going to have your kind of ugly, because of the sort of craziness that happened with price in 2020 when it went negative. That is kind of mucking this up. Let's try Brent. Okay, that might look cleaner. Okay, so still has that kind of ugly month, right, where we had that. Right, but I mean, it was a crazy reaction from price. So we can see, wow, that is kind of a crazy move, right? That's a big move. But it's also relatively early when you think about it, right? So you have that one, that one, that one, that one, that one. Not calling out all of the big ones. Well, that looks pretty important. That's also important. That's kind of important. So just, I mean, thinking about the last major swing low on this monthly chart is not that long ago, which doesn't mean we have to rally for a long time, but what it tells you is this rally is not very long in the tooth. Like, this is just month 8, right? That's really important context. And if you think about sort of previous, like you think about this as a cycle, right? Yeah, this is interesting here, right? So that is 18 months, and you're low on month 24. We're just doing this in real time, folks. You're getting kind of a look behind the curtain. And this is month 18, right? That's interesting. And again, and of course, these are your kind of major swing highs, right? So that is 24 months, like this cycle here, which rallied. I mean, this is kind of an ugly cycle when you think about it. Well, actually, wait a second. We broke below that low. That doesn't work. That's interesting. That, I mean, talk about volatility. So it's really, actually, no, that works perfectly fine because, right, I guess the way you think about it is that is just like a failed ICL that failed below these and just also failed that, right? I mean, it's part of a much larger, massive kind of downtrend. And then you have, and of course, this is a ratio chart. So like this doesn't tell you about the absolute price here. That's about 39 months. And that is a rise of 6 months. Wow. So that is really interesting, where like the way to think about this is that you had this like really bearish cycle here, like that ended here, right? This is your, and just to recap, this is your ratio of XLE to Brent crude, which is, you know, following a very similar trajectory to WTI. Like this was a really bearish move lower, and again, it's a ratio chart, so it's not, this isn't speaking to the absolute prices. So that's a 70% decline in the ratio. It just means there was massive underperformance from XLE relative to crude itself, Brent in this case. So as part of that downtrend, we had this period where we rallied for 6 months, and then we declined, wow, for 33 months. In terms of, so we outperformed, I guess I would say, for 6 months, and then underperformed for about 33, right? And then this was super choppy, but we ended up making we ended up sort of massively outperforming. But that's, you can almost take this was obviously some kind of capitulation low for oil. Even if you just called it here, this was a pretty bearish cycle in terms of XLE. It's still part of a massive downtrend. And we make this low here, and then we make another low down here. I mean, I guess, what's the length of that? And there's no reason why these things have to be an exact length or anything. But that would be 17 months. And so this is 25. Okay. So if this cycle is just 17 months, and I guess the way that you can kind of think about this is a relatively short period of, it's like this period is almost, I mean, what would you even call, yeah, the high would be here, right? So month 2. And then you just kind of meander down to a low on month 17. So it's almost, right? Yeah, I guess in a way, this is really just a continuation of this cycle. So you can just add that up, and that gets you to 41, right? That actually makes more sense, right? So this is obvious. This is a swing low, but I mean, it's a swing low to nowhere. You can kind of say, right? Like, we didn't really get much of a rally, if anything. I mean, even this swing low got you more of a rally here, right? But so that's interesting, right? So like this was a 41-month period of underperformance, even with this kind of massive spike. And now we're starting a new, we're starting this new rotation, right? Where XLE has been outperforming the commodity, and it's doing it by a lot. Now, because it's been such a torrid pace, even if this is going to continue to move higher in the long term, we're going to get some kind of pullback, like, you know, something like that. Even if, you know, we have to, because that's how things move. But you could see something like that. So again, all that to say, XLE could definitely have more legs than one may think, though at the same time, we can see very clearly on the chart, when we have a massive sort of move down, a swoon, if we're going to get that recession everyone seems to be telegraphing, then you're probably going to get both go down at the same time. Yet, I guess the way to think about that is that might be a higher low, within the context of this broader sort of outperformance. And that's what we'll be watching over the years. That's how we think about these things. Big moves over long time scales. And so it'll be very interesting to see kind of how that plays out. Like, imagine you do get, you know, that becomes your higher low, and then we move higher because XLE basically rebounds faster than the commodity itself, which would make sense because these companies pay dividends, they have cash flow, etc. So we'll leave it there. Obviously a complex picture, but definitely not the case that one would want to be just kind of shorting XLE kind of outright. I mean, let's just pop in to take a look at XLE on the weekly chart, if that won't come up. Let's use this one. Right, so I tweeted about this, the idea that we're trying to reverse to make a bullish outside candle, and now we've pulled back, so, you know, we got no follow through. So that is probably, if nothing else, kind of telling you something as well, that, like, again, we're only 8 months into the outperformance, so, you know, it could go for much longer, but we are at least due for some kind of higher low at the very least, potentially.